Ladies and gentlemen, good day and welcome to the Man Industries India Q4 and FY25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Pratish Umarkar. Thank you and over to you, sir.
Thank you, moderator. Good afternoon, everyone, and thank you for joining us today for Man Industries Q4 FY25 earnings con call. First of all, I would like to thank management for providing us this opportunity to host the call. From the investor relations side, we have Mr. Vijay Gyanchandani, DGM. So without any further delay, I would like to hand over this call to Mr. Vijay. Thank you and over to you, sir.
Hello. Hello.
Yes,
Hello.
sir. Yes, sir.
Am I audible?
Yes, sir. Perfect.
Yeah. Good afternoon, everyone, and thank you for taking the time to join our earnings conference call for Q4 and full year of financial year 2025. I am Vijay Gyanchandani, Deputy General Manager of Investor Relations at Man Industries India Limited. Joining me on the call today are members of our senior leadership team, Dr. Ramesh Chandra Mansukhani, Chairman, Mr. Sandeep Kumar Garg, CFO, Mr. Rahul Rao, Company Secretary. I trust you had the opportunity to review our Q4 and FY25 results and the investor presentation which we have shared with the stock exchanges and are also available on our company's website. To begin today's session, our Chairman, Dr. Ramesh Mansukhani, will share some key business highlights and the strategic outlook for the company. This will be followed by our CFO, Mr. Sandeep Garg, who will walk you through the financial performance for the quarter and the full fiscal year. After that, we can open the floor for a Q&A session. With that, I would like to hand over the call to our Chairman, Dr. Ramesh Mansukhani. Thank you and over to you, sir.
Good evening, everyone. We welcome you all. This is Ramesh Mansukhani, and again I welcome you all to our earnings conference call for the fourth quarter and financial year 2025. Let me begin by sharing some key business highlights and our outlook. We have delivered a record performance for the quarter and full year. Our revenue for the year grew 12% in spite of 12% decline in steel prices during the fiscal. Our profit after tax has increased 45% year on year, driven by strong operating performance. Our EBITDA margin expanded 70 basis points to around 9.9%, approximately 10% EBITDA margin. As of 31st March 2025, our order book stands at 2,500 crore with a healthy bid pipeline approximately 15,000 crore. All announced projects are progressing well, and based on the current execution visibility, we are confident of achieving 20% growth top line during this year. We are anticipate a 50.100 basis improvement in EBITDA margins, driven by a more favorable product mix, specifically a high contribution from non-water infrastructure projects and exports, as well as value-added execution areas such as bends and special coating. Export now account for around 75 to 80% of our total consolidation revenue and 80% of our current order book, underscoring our commitment to expanding our footprint in key international markets. We are also seeing a good traction to our ER segment, which now contributes approximately 10% of the consolidated revenue. That is our new division, started last year only. We got the API, all the accreditations to enable us to export, and we got some export orders also from Western countries. It's a mark of significant improvement in the ERW segment. In the saw pipe business, particularly in the ELSA category, we are seeing continuous strong traction, primarily driven by robust international demand for pipeline infrastructure and a revival in large oil and gas transmission projects. The technical strength of our ELSA pipe, especially their ability to handle high pressure and long distance transport, make them well suited for these complex projects. This demand trend reinforces our confidence in sustained growth from this product line over the coming course. Now I'm coming to our updation on the monetizing of non-core assets. I would like to provide an update on the monetization of our non-core assets, Merino Shelters Private Limited, a wholly owned subsidiary of the company. On 31st March 2025, Merino Shelter executed a deed of assignment and granted development right for a land parcel of approximately 6 acres located opposite D.Y. Patil Stadium, New Mumbai, to Paradise Green Spaces LLP, part of the Paradise Group. A upfront consideration of rupees 70 crore has already been received. The company will also be entitled to 30% of the total developed area, equivalent to approximately 450,000 square feet of the RERA carpet, both commercial and residential. The estimated monetization value of our share in the developed property is expected to be in the range of 650 to 700 crore in 5 and 6 years. Accordingly, the total project monetization value, this transaction is estimated to be between 720 to 770 crores. New business. Both of our new projects in Saudi Arabia, Jammu, are progressing well, remains on track to be operational and by Q3 FY26. As of FY25, out of total capex around 1150 crores of these two projects, we are regularly incurring our capex, and most of the equipments, etc., LC is established, and it's a good progress. And we expect to spend an additional amount in the remaining year to complete the project. Recent vendor approval, which is very important. Before I conclude, I am pleased to announce that we have received the official approval from Qatar Energy LNG. It's a listed vendor. This is a significant achievement, further solidifying our position as a trusted supplier in global energy sector. It also represents an important step in expanding our presence in the Middle East. With that, I would like to hand over the call to our CFO, Group CFO, Mr. Sandeep Kumar, who will walk you through the detailed financial performance of Q4 and full year 2025. Over to Sandeep.
Thank you, Mr. Chairman. Good evening, everyone. Let me take you through the financial highlights for the results. Our company in the Q4 FY25 consolidated total income is 1,233.9 crore, which is 50% higher YOY, and EBITDA is also rupees 136.7 crore, up 88% YOY. The EBITDA margin has also increased to 11.1%, which is 230 BPS higher YOY, and PAT for this quarter has been 68.1 crore, up 102% YOY. I am taking you to the FY25 consolidated full year number. Total income for the full year is 3,557 crore, which is higher by 11% YOY, and EBITDA for the full year is 353.2 crore, which is higher by 20% YOY. The EBITDA margin for the year as a whole is 99%, which has increased 70 basis points from last year YOY. The PAT for the year 153.2 crore, up 46% YOY. So this number, what we have achieved this year, are the highest ever number company has ever achieved. And I also like to brief about good performance, good order, which our chairman has already highlighted. So we can open the forum for the question and answer now.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Chheda from Lucky Investment. You may proceed.
Yes, sir. One on the Merino shelter inflow. So now this 30% of 450,000 Vera carpet. So what should be the flow of money? Will it be basically linked to you selling it regularly and based on milestone you get it? That's how it will be for the next 7 years?
The total estimation of the project, 5 to 6 years. All the approvals we got it, and the work is already started. We got 70 crore rupees year 2025. Current year revenue also will get. So every year we'll get the revenue for next 5, 6 years. We are estimating around 700 crore revenue will be there.
So that I understood. Now it will be linked to you selling that area, right?
No, we will get the area and with our consent, as per the market condition, developer has to sell the 30% ours and 70% theirs. So we will get 30% revenue, no expenses, nothing is there, it's a net.
So it's now linked to basically selling of the area.
Yes. It's
applied.
We expect almost 80 crore revenue coming in first year, and then 100 and 120 crore every year over the next 5 years.
So this 80 crore first year means first year is FY26 or first year for you is FY25?
No, I'm talking about FY25 is already over, where we have received 70 crore.
Okay. So basically now this year from the developable area you get the first tranche of 80 crores. The 70 crore has already flowed in FY25.
That is approximately, estimation.
Yeah, sir, approximately. Okay. The second question is, on the order book that you mentioned at 2,500 crore and the bid pipeline that you mentioned at 15,000 crore.
Yeah.
What was the same number last year, if you have it?
The last year's sale was 3,500 crore revenue, roughly.
No.
Last year means
the order book
500.
Can you give? Sorry?
Current year our revenue has been 3,500 crore.
Sir, I am asking the order book number, this 2,500 which you have mentioned. If one have to compare versus last year, what it would have been at the year-end last year, the order book, and the year-end bid pipeline last year. So FY24 end.
25 end, whatever we announced that time we already achieved, but this 2,500 crore comfortable order position to achieve the new target current year, because we have bid book very comfortable and we are expecting order would be materialized very soon. 2,500 crore will be completed in this current year, 26.
Okay. Sir, on the last question on the Q4 number and the margin, is it that you have started booking some orders which are high margin and hence we see what it is for Q4, And so let's say, is it linked to the Southeast Asia order that you had announced to the exchange? Is it linked to that, and how much of that order is executed?
No, this is partly all the many projects are going together, and mostly the exports, and the realization is improved because nowadays we are more getting the high value added products, very specialized products. The company objective and motto is get more value addition to reward to our shareholders.
And I would like to add here that I think you are referring to that Far East order for which execution will start from this current quarter. Q4FY26 we will start executing this order, and this order will be completed. This complete full year FY26 order will be completed.
So basically, we will see the H1 also on a higher growth note, unlike last year, FY25, where your entire growth came in Q4. Is it possible that this time around the growth will be evenly spread in the whole year?
We hope and we expected the growth will continue in all the quarters, coming quarters.
Okay. And my last question is this 12% top line growth, what is the corresponding volume growth?
Corresponding volume growth, if I estimate my steel price to be stable as currently a rate, so this growth will come from the volume growth only.
So now I'm asking for FY25, the year gone by, what was the volume growth?
So 25 also there is a growth, and 25-26 will be also growth in quantum as well as the volume amount also.
Okay. Yes.
Thank you.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. You may proceed.
Hello, sir. Am I audible? Hello.
Yes, sir, you're audible.
Yeah. So, congrats on good results. So, just wanted to know how this accounting treatment has happened for real estate business. Like in this quarter, you have shown 368 crore revenue and 45 crore EBIT. So, this is for 30% of our portion of area we would have sold in FY25, and the 70 crore upfront money we have received, where it is reflecting?
No.
I will take this question. The deal which we have announced on 31st of March, there was an assignment of the land which we had with us and the certain CWIP. So the sale which we have accounted as on 31st March 25 is part of that value. The 30% which we are expecting further will be forthcoming in next 5 to 6 years.
Yeah.
Okay. So these kind of revenue will not reflect in future. We only have this our share of, as you said, 700 crore. We are expecting over 4-5 years.
Will be expected as a revenue and profit which will directly come over the period of 5 to 6 years. Every year, around average 100 to 120 crore will be coming to our P&L.
Monetizing will continue.
Okay. Because we have received 70 crore and we have shown 45 crore as a EBIT. So, and you also said that
there is no relation. Actually, this EBITDA, etc., is our pipe business. That Merino was a non-core business which we sold out. Right, sold out.
Okay.
And we got 70 crore as advance, and the balance we will get 700 crore by way of 30% share in the property. That revenue will be additional revenue for coming years for the company.
Okay.
Yeah.
And you also said that
that will be the net receipt by the company in coming 4, 5, 6 years.
You said that from FY26 onwards, we will have 80 crore, 100 crore cash flow from
FY26 onwards. This will continue receipt of the profit, you can say.
And we will have no expenses and not even marketing costs.
Not our developer will pay everything. He paid everything. The work is started.
Okay. Okay. Because they will be selling our flats, so they will not charge marketing cost for that?
As per our agreement, we are not going to bear any marketing cost. It is on the account of the developer.
Okay. And secondly, on this Saudi capex, what is the status of this debt tied up?
Debt, we are working with the bank. Total project is 600 crore. 400 crore is our debt portion, and we are at the final stage of freezing the bank.
In principle letter, we got it.
Yes, in principle letter, we are already.
And lastly, in the presentation, we have shown this breakup of this 70%, 30% funding through debt and equity, and already capex incurred. Like in case of stainless steel, we have shown 1.56 billion already incurred and 2.82 billion committed. So what is the committed and capex incurred figure? Difference? What is the difference?
We have the lines connected to the management, so you may proceed.
Hello. My question is that in stainless steel pipe, total project cost will be 564 crore, and we have incurred about 156 crore. And there is one more item mentioned, 282 crore committed. So what is 282 crore committed in this slide?
Total, our project is 554 crore. Correctly, you have mentioned. We have spent almost 2 crore on this project. Balance is committed. Where we have a place order for the machinery, LC opened, and machinery is getting.
Okay. Got it. Okay. Thank you. That is all from me.
Thank you. The next question is from the line of Darshil Pandya from Fintrust Capital. You may proceed.
Hello, can you hear me?
Yes, we can hear you.
Yes, sir. So good evening. Sir, my question is related to cash flow statement. So precisely we have reported 300 crores of EBITDA, but if you see on the operating cash flow side, we just generated around 68 crores, so, which is primarily driven by receivables, inventories. Obviously, it is offset by payables. But could you help us understand what's driving this stretch? Is it something to a specific business cycle or a structural shift? What is it?
Only the project which we are currently executing, that has inventory which is getting ready and getting shipped in next quarter. That is the only reason of inventory buildup. It is project specific. As our business is very quietly, we make inventory only for the project specific, and all this will be shipped. And this next quarter, which current quarter we are running, inventory and debtors both will be neutralized.
Got it. And sir, out of 1100 crores, if I just forgot to understand, how much have we totally incurred till date?
We have incurred almost both the projects.
250 crores.
Yeah. And balance is our commitment on LC and order placement.
Okay. And we had some plans to even raise funds. When is this expected to happen, or any timeline for this?
I did no comment, and we will not comment on that.
Okay. All right. Thank you so much.
Thank you. The next question is from the line of Raman KV from Sequent Investment. You may proceed.
Hello, sir. Can you hear me?
Yes, we can hear.
So I just have 2 questions. Sir, I just want to understand the 368 crores entry with respect to the revenue from real estate segment. Like you said that there was 70 CR upfront payment. I got that part. So where did the additional 290 crores come from?
We're talking about our Marino shelter transaction, right?
The real estate revenue from real estate segment. Yeah.
So we have, I think I replied this question just now previously. That
Hello, sir. Can you hear me?
Yes. I will reply you. The total land and the CWIP in the Merino shelter, since we have assigned the land right to the developer, that property item has been sold and booked as a revenue. And against that sale, we have received 70 crore upfront.
So you got, against the sale of land, right, you got 70 CR, right?
I will repeat my statement again. We have the lease, land available with us and CWIP, which was part of the construction. That has been assigned to the developer, and total value of the transaction as per the government guidelines is 368, which we have booked as a sales revenue in our books. Now 70 crore we have as a cash against that deal which we have received. Balance is expected in next 6 years. From the sale of the property development.
Okay. Yeah, I understood now, sir. Thank you. And my second question is with respect to the guidance which you gave. So I just want to understand with respect to, standalone, how much business can we do in FY26, 20 and 27? And in FY26, how much incremental revenue is contributed through the subsidy and upcoming capex?
As already informed, this time around our 90% revenue is coming from standalone. Out of 3,500 crore turnover current year, around 3,200 crore was our pipe business, and then rest of the real estate, etc. So we are expecting 20-25% growth as a standalone. Should reach around 4,000 crore as we guess expected, and the balance will come from the consolidated from this property, Jammu, and from Saudi. That will become in the consolidation.
So 4,000 CR with respect to standalone in FY26 or 27?
26.
In 26.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Raghav Rathi from Condrum Holdings. You may proceed.
Good evening, sir. My question is regarding the interest cost that we have showed. So the interest cost is around 100 crores to us, and how much of the interest is towards the new project that we are taking, around 800 crores of debt? How much of that has been used up, and what can be our interest cost after we have used the entire debt?
So I will reply this question. The total interest cost for the year has gone up from last year because we are taking high executive projects are going on, for which we have given guarantee. We have used non-fund based limit. So once we use non-fund based limit, in that case we have to keep deposit with the bank. So if you look at that, my income has also gone little higher from the bank interest income, because I have to keep margin there. So this amount is getting nullified from the income side as external, if I talk about.
So around 14 crores that we had received as interest income.
And also the new project which we are talking about, since the projects are still under the implementation stage, their interest cost will be appeared in the financial in the next year.
Capex, right?
Currently, it is part of the CWIP CWIP capex.
Okay, sir. Thank you.
Thank you. The next question is from the line of Arpit Tapadia from IGE Family Office. You may proceed.
Yeah, hi. Thank you so much for the opportunity, and congratulations on a good set of numbers. Can you throw some light over the EBITDA per ton incurred during this quarter over FSAW, LSAW, and ERW separately?
In our business, since we are into specialized product, where we supply product to the customer with different type of coating, with a high value coating, we don't monitor EBITDA per ton.
Okay.
And it is not comparable because every order is different, depend on the specialized coating which customer is asking, and we have been providing.
Like our coating is a 3LP, CWC, FB, and different kind of pipe, different dias are very difficult. You can see the overall EBITDA, which is approximately 11%, right?
Yes.
Yeah.
Got it. Pardon my ignorance, how much CapEx over the Saudi plant has been already incurred?
Saudi, we have spent hardly anything, hardly 5 to 10 equipment, sir. But we have a huge commitment against the orders for equipment and machinery placed.
Got it. And how soon we are expecting it to commercialize?
Land development is already done, and construction activities are going to start so quickly under approvals, and the equipments we have. So that's why it will come during this year.
Okay. And what kind of asset terms we are expecting from the Jammu as well as Saudi plants?
Mr. Garg already informed around 600 crore total capex.
550. For Saudi, 550 is capex for the Saudi project. Can you? Yeah.
What about asset terms?
What is the question?
That is the level of investment we want to put in. What kind of revenue we will be generating? What is the potential of the revenue from those plants?
This is actually the revenue will come in the full force once the plant is open, around 2,500 crore, once the full-fledged. And this Jammu will be between 1,000 to 1,200 crore.
At the full capacity running?
At full capacity, 1,000 to 1,200 from Jammu and 2,500 from Saudi.
1,500.
Is that understanding correct?
Full-fledged. Full-fledged around 2,000 crore.
No plant.
Both combined together.
No, I will repeat again. Saudi will be around 2,000 crore full revenue at full capacity utilization. Saudi will be Jammu will be 1,000 to 1,200 crore at the full capacity utilization.
Got it. And how do we expect to ramp up those plants after commercialization?
Maybe in 2 years we are going to get the good fruits.
Pardon, please?
Roughly in 2 years, 3 years, we will be able to achieve
the optimum level
of optimization.
Got it. Okay, that's it from my side. I'll rejoin the queue for any further question. Thank you.
Thank you. The next question is from the line of Dhavan Shah from Alpha Curated Advisories. You may proceed.
My question is on the revenue side. I think you mentioned that in FY26, the standalone business can do roughly 4,000 crores of revenue. But our order book right now is 2,500 crore. So are we in the final stage of negotiation of any big order which may come maybe in next 1 or 2 months?
Our bid book is around 15,000 crore, and we have some negotiations going on. And normally this order book which I am telling is only as on April. We have full year ahead, and definitely we are at the final negotiation of some good orders, which once we receive, we will be announcing that. And we are.
I am asking this because, if I look at the order book of since last 2-3 quarters, it is already declining. It was earlier 3,300 crore, then 2,800 crore, and then 2,500 crore.
No, I would more clarify that is not a right indication. And every project is having evaluation process. It takes time, and we are very much confident to improve upon the order book position very soon. Because there is not any barometer to gauge so many orders is coming in one quarter, the second quarter will be very less. It is not a right barometer for the market for this project, because this project is, and we are mostly in the export business, so this kind of things always happens.
Mm-hmm. But are we sure that maybe the big size order like we received last time roughly 1,800 odd crore, that kind of big order can also come?
Why 1,800? Maybe more also. Why 1,800? You are directly calculating 2,500 plus 1,800. No. This is not the way. Maybe much more. I don't know this moment. But we cannot say on this forum. But yes, good order book, good bid book. We are confident to achieve it.
And it is a rolling process. Every quarter we get order, every quarter we execute.
Yeah.
So if I have always an order for 6 months for 2,500, it will be around 5,000 crore order for a year.
Yeah, maybe.
But it's a rolling process where every time we are getting order and we are executing order every quarter.
Yeah.
Understood. And sir, in ERW, I think you mentioned that 10% of the revenue came from the ERW for the full year. Can you say how much is the overall volumes for FY25 from ERW side?
Around this more than 350 crores, as we indicated, 10%. And we hope to continue with grow this current year also. Because after the initial problems of the accreditations, now we got a lot of accreditations, including API and some more complex accreditations. And we got some orders from on export front with a better value addition. And we are going ahead in that direction, and we are hopefully to get the more capacity utilizations.
No, 350 crore is absolute number. In terms of volumes, how much metric tons?
No. Not 350. 350 approximately.
No, in volume terms, in terms of metric.
No, I do not have the ton. I have the only rupees volume this moment. That's why I am giving the rupees figure, the turnover figure.
Okay. Okay, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Prabal Jain from SM Holdings. You may proceed.
Yes, sir. Hi. Sir, I remember, I think in the Q1 or Q2 Concall, you mentioned that you have ventured into green hydrogen pipeline and you've got approval from EU, European Union as well.
Yes, sir. You are right.
So, sir, I just want to understand where we stand here. Do we have any significant projects here in terms of your bid pipeline? Has something converted into actual projects?
We got the compatibility to produce the pipe of hydrogen, but not any project come out in India this moment. Regarding export front, we are working in the few countries, but still it is a nascent stage, and it is a future, but I can't say this moment, maybe 6 months, 1 year, maybe a bunch of projects will come in future. That's why, as a proactive company, we got the approvals and we are ready.
Okay, sir. Another question, sir. So you mentioned that your Jammu plant can do a top line of 1,000 to 1,200 crores at full capacity, and Saudi can do 2,000 at full capacity, right?
Yes, sir. 1,000 to 1,200.
And yeah. So, I mean, going by this, and currently you are doing a top line of 3,500. So, if I add this 3,500 and 2,000 and 1,000, so maximum top line that you can have with all of the infrastructure once it commercializes in Q3 FY26 would be 8,000 crores, right?
No, I will again correct it. This number which we are given is at the full capacity.
Within 2 years.
Which is a timeline of 2 years, because our commercial production will start in Q3 FY26 and it will take time to ramp up the. So you are right. The time we reach full capacity in India, Jammu and Saudi, we will be reaching those numbers which you are adding.
Yes.
Correct. So that is what I meant. I think once you ramp up, because obviously Q3 you will be starting, there will be some teething issues. So once it is at a very optimum, or I would say at a capacity utilization 90%, you can do 8,000 at the top line level, right? Real estate revenue is separate.
It's a good wish actually, and we are working towards direction. Although whatever you are saying, it should be, but we are a conservative company, that's why we do not announce it. But whatever you are saying, as per the calculation, you are right.
Yes. So, sir, just wanted, because I listened to your interview also, it was very good today morning. You mentioned that this year you'll be doing conservatively, you mentioned specifically, you can do 20% this year.
Yeah.
And next year, it is interesting, you said that we can also do 100%. So, I mean, how should we read into that?
Sir, whatever you are saying, I am saying the both are the same thing. The next year means 26, 27.
26, 27.
Yeah. So there is a 2 years. So there will be two growth. One will be for year this one, which we are aiming 20% conservative. Then another growth on the top of that. Then I think so our estimation and whatever you are saying is going to match.
Okay. And sir, just to top it up on this part, because currently we have an order book of, I think, 2,500 CR.
Yes.
And so I'm expecting that obviously some order will flow in this year, but for FY27, since you are operationalizing these two plants, Jammu and Saudi, do you have any pre-commitments at the order level? Because, I mean, that is where we get the confidence that FY27 is going to be better than FY26, right?
Yes, there are some pre-commitment over there, but still it is a very premature to announce this moment. Let's start then production, and then there will be more formalized, will be much better. The initial, because we are in still same market, we know, but it is premature to say something in this moment.
I understand. Sir, one last question. Once you operation, because CapEx till the commissioning of the facilities is sorted, but once you operationalize it, would you be requiring any significant capital for working capital or something else? Or you will manage internally approvals?
No. Working capital will be separately assessed by our banks. On the right time, before few months of the production, maybe 3-4 months, our banks in principle agreed to support, and we are very confident to arrange the working capital limits.
Okay, great, sir. One final piece, sir. You have pledged any plans of reduction or increasing anything?
This moment, no comment. Regarding what pledge?
What pledge?
No. Stock pledge. The equities is pledged.
Our stock pledge, no. Nothing. No problem.
Okay, sir. Great. Thanks. I'll get back. Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Anil Jain from Equipassion Capital. You may proceed.
Yes, sir. Good evening. Yeah, wanted to know the volume numbers of FY25 and FY24.
Volume number we do not know this moment. We are working on that, and then we will communicate separately. This moment we do not have the right figure. Different pipe size.
Okay. Or else can you share the capacity utilization
capacity
of the
and depend on product mix basis. This time we are some plants, we have 5 plants. You can say 3 plants are fully busy and 2 plants is partly busy. Depending on which dia, which kind of pipe, island gas, water, there are a lot of calculations, sir.
I understand. So, can I know, or at the present product mix, what is the total revenue potential from the existing plants?
All is existing plants.
Existing plants only.
All the existing plants.
New capacity will be adding up in current financial
year. No, I know that. I understand. But I wanted to know the total revenue potential from the present capacity. Which we already have.
Okay, potential, sir. Yeah. If not increase the capacity, we can go more than 5,000 crore in the existing without putting any capex, without putting any much more efforts, except marketing, combination of the product mix should be in our favor. You know, which is no one's hands. Yeah.
So like you are already projecting 4,000 crore of top line in FY26,
Yeah.
and we add 20% growth, it comes to 5,000 for FY27 from the present capacity,
Yes.
right?
Yes.
So what are your CapEx plan?
No CapEx in existing, only CapEx in Jammu, which is going on, and Saudi, which
Okay.
is also going on.
Okay.
So no new announcement,
Okay.
nothing, only this. Whatever we have taken the job on hand, first we have to complete it.
Okay. Got it.
Maybe a small
Okay,
capital expenditure as a routine expenditure will continue.
That is around 25-30 crore spent on the regular CapEx in
Yeah.
India.
Maybe upgradation of the plant and more modernization, etc.
Okay. Okay. Okay, sir. Thank you. That's it from my side.
Thank you very much.
Thank you. The next question is from the line of Kushal from an individual investor.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I just want to understand the order book pipeline of 15,000 crores. How much of it is export?
My order book is, as on now, is 2,500 crore.
No. The order book pipeline of 15,000 crores, how much of it is export?
You can say very safe side between 80 to 90% with is international, because we are an international accredited company. Of the approvals are with us. We have 25 countries. That's why our aim is 80%. Out of 15,000, maybe 12, 13,000, maybe export, maybe 1,000, 2,000 crore in India.
Okay, so 80% is export out of the 15,000 crores of order pipeline.
Yes, sir.
And sir, do we do any work for Jal Jeevan Mission?
We are part of Jal Jeevan Mission. We are doing in India. Our water segment is very small. Water segment is our hardly 10% of the revenue. We have to see the flow of the money from the government. Accordingly, we can improve our contribution to the Jal Jeevan. Right now, we are doing 8-10% roughly.
Okay. Sir, and lastly, on this accounting entry with respect to the Merino shelters, 300 crores, around 300 crores was added to the top line. Am I right?
Yes, sir. Mr. Garg is the right person to reply it.
Yes.
Please.
Sir, around 300 crores, how much was the amount added to the top line?
368 crore.
368 crores. So, and were there any expenses attached to this 368 crores?
Yes.
Hello?
Yes. Slight expenses.
Okay, so it's most of it is percolated down to the bottom line.
No. I will say total, I think somebody asked the question to me earlier.
Yeah, it's a little confusing, sir. Can you explain this again? I'm sorry, but yeah.
There are certain costs of the land assigned CWIP which has gone into cost of the P&L, and EBITDA is around 40 crore from that business.
Okay, only 40 crores has translated down. Okay, to EBITDA. Rest of the EBITDA, that means of 150 crores is from the pipes business.
Yes.
And sir, one more question.
No, 150. 300 crore.
300 crore.
300 crore plus.
Okay, for the year, you're saying for the full year. Okay.
My EBITDA from the core business is 328 crore.
328.
And console level is 353 crore.
Yeah, that's for the full year, right? You're talking about the full year.
Yeah.
Yeah, okay. And sir, how do the raw material prices affect us? Our margins have been pretty consistent over the last 4-5 years, but how do raw material prices affect us? Like say, for example, if one quarter raw material prices were to shoot up, so how does it have an effect on us? And with what kind of lag?
See, our business is that once we get a order confirmation, same time we get raw material rate also freeze and confirm and hedged. So any fluctuation in the raw material prices doesn't affect our project and project profitability.
Okay, so you are confident of maintaining this 8 to 10% of operating margin going forward?
As soon as the order confirms, my customer confirms the price, I get my raw material price also confirmed with my supplier. So that protects my profit margins and profitability is protected.
Okay. But sir, this is little confusing. Out of the 368 crores, only 40 crores is translated to EBITDA. So where is the other 228 crores gone? Like, what was the major chunk?
It was the cost which has been incurred over the period in that project.
Work in progress.
Capital work in progress, construction and cost of the lease, other expenses.
So in the balance sheet, where was it standing for all these years?
Yes.
Where was it, in which line, in which item was it in the balance sheet?
WIP.
Huh?
It's a part of the inventory. Capital work
Okay,
in
it is
progress.
inventory. So you have written it off against that 368 crores, around 220 crores you've written it off.
No. Repeat what you asked.
No, so I'm just trying to understand the accounting because there's some confusion. 368 crores went to sales and the 228 crores you're saying went to some expenses and 40 crores was EBITDA. So in the balance sheet, where was the 228 crores showing?
Total car, since I told you the total profit is 40 crore, so around 338 what value has gone into expenses, which was part of my inventory, which I was accounting as CWIP and construction cost and other expenses.
So that's what I'm saying. So CWIP should have gone down, right? But CWIP from year on year has gone up.
No, it has been completely removed. Value is zero now. Everything has been sold in Merino shelter. There is new CWIP.
Okay, that is a new CWIP that is going on. Okay, the Saudi plant and the Jammu plant.
What's
Okay.
my Jammu and Saudi project capital?
Understood. So now for the remaining 5-6 years, you will show more revenues of around 350 crores, roundabout.
No. Our projections roughly is around 700 crore from the projects.
Okay.
2026, 27, 28, 29, 30, next 5 years. Every year we are seeing 80 to 100 crore revenue every year will be there.
So then that makes the total saleable value as 368 plus 500 crores, right? So that is upwards of, okay.
750. How 700 crore revenue will be book in coming years. That will be the no expenses from our side.
So that will be separate from this 368 crores.
Yes, that is in addition to that.
Yes. Now you got it.
So the total sellable this thing is 368 plus 700. Is that the right way to understand?
No, this is our expected revenue over the next 6 years.
And 368
is already booked.
Okay, 368 is already booked. So this is the accounting entry. Now in terms of cash flow, we have received only 45 crores from the developer.
We have received 70 crore from the developer so far upfront. And
Okay.
Balance amount is receivable. As the sales will happen, we'll be receiving those funds from them.
Every year the sale will come, but no SWIP, no expenses.
No expenses.
So the sale that we have booked, sir, I think I'll take it offline actually. I'll take this offline because it's a little confusing. So I'll get in touch with the IR and get in touch with you. I'll do that.
My IR, Mr. Vijay, and if you have any questions, we can reply you offline.
Yeah, Valorum is the IR, so I'll get in touch with you because I'm a little confused. Okay, thank you. Sorry to take your time. Thank you very much.
Thank you. The next question is from the line of Radha from B&K Securities. You may proceed.
Hi, sir. Thank you for the opportunity. Sir, I wanted to know the key geographies where we are exporting each of the pipes separately, if you could mention for LSAW, HSAW and ERW.
Yes, madam. What is your question? Can you repeat it, please?
Yes, sir. I wanted to know the key geographies wherein we are exporting for each of the pipes separately, LSAW, HSAW and ERW.
Yes, sir. Yes. It cannot be mixed. Every segment is different and every use is also different. For oil and gas separate and for water and non-critical uses are different.
Geographical, MENA area is our biggest customer, which consists of North Africa and Gulf and Saudi. These are the biggest consumers, our biggest customers. But we export to other areas also, like Currently, we are executing a big order for the Far East. We supply our pipes to part of Canada, other part of the world also. Europe, Canada. But those volumes are
So
small.
is it
Major business come from MENA and Far East.
so is it safe to assume that 80% of the 90% exports would be done to MENA region?
No. It depends on project.
Depend on project, and we cannot say geography always changes. Our projects in 25 countries, including Far East Asia, MENA region. That's why we see where the more projects are coming. The geography can be changed, but 70-80% export is our objective, our aim, which we are achieving.
Could you give us some light in terms of is there any tariff on either of the products that we are exporting or the current tariff scenario
No.
in these regions, in our export market?
We are not in the USA, and there is no tariff impact. And mostly oil and gas segment covered by government buyer most of the countries. The tariff is not going to make any impact. But not on us.
Here I'd like to add something here that Trump government, whatever tariff they have put in US, is going to benefit manufacturers from India because they will become at par with suppliers from other countries. Yes. So it opens a door opportunity for Indian manufacturers to export to US because they become at par with the other country where they will have a duty-free export.
So currently we are not exporting to US, and if in case there is any tariff situation, you are saying it would be a favorable situation for the company.
Yes, it will be better position for us.
So what is the tariff rate, the current situation that US and Europe are imposing on ELSA and ETSA?
There is no exposure to US. No. There is no exposure to US.
Not for the company, sir, for the industry.
Sorry?
For the industry, sir.
I cannot comment on this.
Just to understand the potential.
Very few. Okay, madam. Anything else?
No tariff. Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Darshil Pandya from Fintrust Capital. You may proceed.
Sir, just to confirm from the previous call of Q3, additionally of above 4,000 crore which we are targeting, 1,500 crore additionally is what something we are targeting, right?
No, 4,000 is our goal.
Hello?
Yeah. What is your question? Can you once again repeat it, please?
Sir, in the last call, we did mention that, we are looking at around 1,500 crores of additional revenues once these capacities are coming live.
You are talking about Jammu and Saudi capacities?
Yes, sir.
That capacity will be operational from Q3 of current year, and they will also contribute. Last time we have given some number, but definitely we are working towards to achieve those numbers.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Arvind, an individual investor. You may proceed.
Hello. Congratulations for good set of numbers, sir.
Thank you.
Sir, I have 2-3 questions. Is there any dividend declaration this year for FY25?
No. We are not.
Not now. In future, I don't know.
Current year, board has not proposed any dividend distribution.
Currently in this balance sheet, no, but in future.
And the reason being we are into expansion mode, so we want to reinvest the profit into our capex budget.
Okay. And one more question, sir. Regarding this, is there any update regarding the MAN Infra shares?
MAN Infra?
What is?
MAN Infra.
Yeah.
The old issue that, and there is no update from company yet. So I'm eager to listen about it.
No, that is better. It's sub judice, and that's why we do not want to comment particular subject. We do not know. You are talking overall. You are talking any specific, and That's why there is a matter of sub judice, but that is a separate company and we are separate. There is no impact on this company, whatever they are doing.
नो वो पिछले 4-5 साल पहले आपने बताया था कि वो आप शेयर होल्डर्स के लिए मान इंफ्रा का शेयर अब कुछ फ्री अलॉटमेंट होने वाला है, तो हम लोग उसके लिए वेट कर रहे थे सर।
तो वो मैटर कोर्ट में पेंडिंग है ना अभी तक कोर्ट में पेंडिंग है, इसलिए कुछ हुआ नहीं है। जैसे कोर्ट में पेंडिंग होगा तो आपको जरूर खबर करेंगे क्या हो रहा है।
राइट, तो उसके बारे में कुछ अपडेट नहीं आया था, इसके लिए पूछा।
नहीं, कोई अपडेट नहीं है, नो मूवमेंट इन फ्यू इयर्स।
अच्छा, और ये अभी मरीनो शेल्टर का जो डील हुआ है रिगार्डिंग दिस, तो शेयर होल्डर्स के लिए कुछ रिवार्ड करने वाली कंपनी है या कुछ?
रिवार्ड करेंगे ना सर, जो रेवेन्यू आ रहा है तो अल्टीमेटली आपके लिए आ रहा है कंपनी में। इस कंपनी में जो भी आ रहा है, कोई लोन नहीं है, कुछ भी नहीं है, हम कुछ पे नहीं करने वाले हैं। जो भी आएगा वो पैसा सब आप लोगों का ही है। जो भी आएगा 600-700 करोड़ रुपए जो भी आएंगे आप लोगों के ही है। तो यहाँ जो प्रॉफिट है पाइप बिजनेस के साथ साथ में जम्मू का प्रॉफिट भी आएगा, सऊदी का प्रॉफिट भी आएगा और ये प्रॉफिट भी आएगा, सब आप लोगों का है।
ओके, थैंक यू सर, थैंक यू।
Thank you. Due to time constraint, that was the last question. I now hand the conference over to the management for closing comments.
Thanks a lot, all good listeners, and to all the arrangers, and to make the successful this call. Thank you once again.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.